Ladies and gentlemen, welcome back to the channel. I think it's time to brace for a potential rally in AMC as well as other names. According to Tom Lee, that's what they expect from the markets as well in the month of December. Now, this is Fundstrat, Tom Lee. If you guys don't know who he is, well, you're probably not. You probably haven't been an investor for a while. He was the one that was really pounding the table to buy tech stocks in the end of 2022 when the markets hit their lows and the exact stocks that did well. But nonetheless, you are starting to see a secular rotation. Capital is moving hands and heading into new sectors. This is going to cause a rally for certain sectors we'll talk about here in this video, but also likely for AMC stock. As you can see, AMC was up 3.16% on Friday, up another 0.15% in after hours. We're going to get into the latest developments that you need to know with AMC stock here in this video. Do me a quick favor first before we get into it, hit that like button and subscribe to the channel. It helps push this video out to as many people as possible. And anyone that is in AMC wants to hear this video, rest assured, I assure you of that one. So first things first, what we seen on Friday was really dovish Fed Jerome Powell, a Fed Jerome Powell that endorsed this rally, that confirmed this rally without saying. Fed Jerome Powell said, this rally is okay. This rally's fine. We're okay with this. The market's pricing in 5 rate cuts, potentially 6 rate cuts in 2024 is okay. And we're just fine with that. There was a lot of fears on Wall Street that Fed Jerome Powell would really be hawkish on Friday. He was not. So you did see some capital go into interest rate sensitive names. Those are the names that will continue to outperform. And a lot of those stocks, those quality stocks, that is, Fubo, SoFi, DraftKings, Snapchat, Crocs, those kind of names, household, well-known, high-quality names that have been improving their fundamentals. PayPal, did I say SoFi? Those are all names that probably go up over 100% from here in 2024, in my personal opinion. Just based on fundamentals, that would make sense. Those stocks are trading at historically low levels. The entire Russell is. So when the markets are pricing in 5 to 6 rate cuts for 2024, and the Fed confirms that that's okay, yeah, expect a rally. It's not just going to be a one-day rally. This is going to be a multi-week, multi-month shift of capital into stocks like I just mentioned. So that's important. And I think that's the main thesis here, why a rally is coming. Now, we also seen some AMC specific things happening as well on Friday that were very exciting. One of them I pointed out was just the sheer amount of call activity relative to puts. So total call volume was 265,000 calls, 47,000 puts. So over a 5-to-1 ratio, over 5 times as many calls being bought than puts. At the $9 call alone, you had 80,000 contracts purchased. $7 call had 65,000. $7.50 call had 30,000. $8.50 call had 24,000. $8 call had 23,000. The highest put that's seen the most activity was the 650 put, and that had less than 13,000 for activity. So I mean, just relative to what you've seen on the put side, I mean, the calls were massive, right? Options tend to be forward positioning. You can't backwards position into options. You have to buy an option and expect something to happen in the future for you to actually make money. So based on what we've seen on Friday, yeah, there's a lot more people expecting AMC stock to go higher from here than to go lower. Now, you do have the Beyonce film that did hit theaters yesterday, and hopefully we start to get some good news on that front. I don't believe there is any news yet for this film, which obviously, as you know, is a film that's being distributed by AMC, so the margins are going to be better on that. The ticket prices themselves are also going to be higher. So it should help AMC more than just any other random movie going to theaters. Now, take a look at this post from Tom Lee. He says, looking at the past week was a day of reckoning for anchored bears. Bearish anchors. The Fed would hammer at stocks. That did not happen. Fed Jerome Powell did not do that on Friday. Rates would reverse higher. That did not happen. And stocks were extended and overbought. He says instead, small caps had a face ripper rally on Friday, and that was IWM. Our evidence-based research suggests this zigzag up was coming post-October. And this is Fundstrat. As we look towards markets into year-end, we see a zigzag, but ultimately a rally towards S&P 500 4750 to 4800. We are a dip buyer in December's zigzag. This is roughly what they're expecting here. So October PCE came out November 30th. They're expecting some form of a pullback into the December 8th November jobs report. Right, that's going to be coming this week. November 8th is on Friday. And then they're expecting a move higher from there, a move lower into November CPI, which is the 12th. That's going to be the following week. I believe the 12th is Tuesday. So, take the timeline with a grain of salt. And then you have the December FOMC, December 13th. And then you could see that FOMO Santa Claus rally into December. Now, I don't know about the specific catalysts that are going to cause what, that are going to make the markets go higher or lower. I think the point here is we have a lot of catalysts, right? November jobs report, November CPI, December Fed on the 13th. These are all three going to be major catalysts coming this week or the week after. So there's going to be a lot of volatility in this range, but Tom Lee and Fundstrat expect a year-end rally. And I think so too. I mean, I think it's pretty obvious here that there's under allocation of stocks across the board, especially stocks that stand to benefit from interest rates going lower. There's going to be a lot of capital coming off the sidelines into those stocks that will benefit from that. So I think you'd be a fool to be in bonds, heavy right now when stocks could massively outperform. I think you'd be a fool not to get some exposure to stocks if you have been on the sidelines for years, potentially 2 years or even the last year, when rates are expected to be cut 5 times and the consensus is for a soft landing with over an 70% probability is the average consensus. So I think you'd be a fool to not, essentially be buying stocks at this point. Now let's take a look over here at the Ortex data for AMC stock. On Friday, you had 17 orders totaling $1.02 million with a positive order value of 82%. So hedge funds and institutions were also very, very bullish. That was not just retail investors that were, buying all the calls and, not buying the puts, a 5-to-1 ratio, essentially. It was hedge funds and institutions as well. So this could mark a turning point for AMC stock, which in the short term could be exciting. We'll see. I hope Adam Aaron gives us a little bit of clarity and says, we're not going to dilute shareholders in 2024, or for the first half at least. That would give us a little bit more room to run, but we'll have to wait and see. Now, if you take a look at the volume on Friday, 78% to the call side, 22% to the put side, pretty much in line with the other option activity as well. Now let's take a look at the short interest, short positioning. You have a short interest of free float at 10.69%, $140.58 million worth of short positions in AMC. Days to cover 0.89, 21.14 million shares that are currently sold short. Shares out on loan 15.38 million. Cost to borrow 1.21%, utilization of 37.38%, and a short score of 58.31 out of 100. Cost to borrow average at about 0.74%. Cost to borrow minimum negative 0.2%. Cost to borrow max 14.13%. So If you believe these numbers, you probably shouldn't be in AMC for a potential short squeeze. I think these numbers are false. And this rule change, this SEC rule change, has likely already went into effect. We didn't have an exact date, but we knew about 30 days after this publication, which this was published on October 13th. But it's going to take some time before the government aggregates all that data and posts it to some government website out there. So it's going to take a little bit of time. But I do think this should be a positive catalyst, although we're probably not going to know how many short positions they are. We're going to know who's short, and they're going to have a big light on them that they have not had literally any other time in history. Take a look at this AI investor sentiment survey that has just now came out. For the week ending November 29th, 48.8% of investors are bullish, 31.7% of investors are neutral. Take a look at this. Bearish investors are 19.6%. Falling off of a cliff in just the last, 2 weeks or so, going from 28.1% of investors bearish to 19.6%. The historical average is about 31% of investors that are bearish. So you are getting a little bit on the, too bullish side, but I think there's a logical reason to be bullish right now, right? 5 rate cuts, 2024. That's considering a strong economy or a decent economy. If you see any kind of weakness to the economic outlook, you're going to start pricing in a lot more rate cuts than that. And let's be honest here. Do I think a recession is coming in 2024? Absolutely not. Why? I think the government would pressure the Fed to cut rates 10 times, take rates down to 2%. Or lower than that before heading into recession in 2024. Because why? You're not going to win a re-election if you're in a recession. It's just not going to happen, right? It's only happened one time in history that a president has won a re-election if you were in a recession during the election or the prior 2 years before, which in that case, William Taft, it was like 2 years prior you had a recession and then he won a re-election. So yeah, people vote with their pocketbooks, long story short. So I think you'd see a lot of rate cuts before you seen a recession in 2024. I think a recession is probably a bigger deal for 2025, in my personal opinion. So I think that's important. But hey, you never know. You never know how the economy is going to do. But that would be my expectation as of right now. If we take a look at the stock tracker data, take a look at what we're dealing with here. So for Friday, you had about 4,000 calls expire in the money, 99,000 calls expire out the money, 13,000 puts expire in the money, and 34,000 puts expire out the money. Now, for option activity for this week, you got about 4,200 calls that are currently in the money, 58,000 calls that are out the money. In the money puts at 8,542. Out the money puts at 19,802. Now, considering the option activity that we've seen on Friday, these numbers are going to balloon coming on Monday when this data does re-aggregate. Again, you had like 80,000 calls purchased at the $9 call alone. So there's going to be a lot more option activity on, this next week and over the next couple of weeks. If you take a look at December 15th, you got about 4,000 calls currently in the money, 117,000 calls out the money. That's a big one. About 23,000 puts in the money and 59,000 puts that are out the money. So I think next week is going to be a big week. Obviously, we have a lot of important economic data. We'll go over that in the next video. We'll also go over some of the earnings that will be coming out next week because that's also going to be big for AMC. So that is going to do it for this video. Let me know what you guys think about this down below in the comment section. Do you think a broader market rally is coming in your interest rate sensitive names at the very least? Do you think that will benefit AMC like I do? Let me know what you think down below in the comment section. Hit the like button, subscribe to the channel if you guys made it to the end of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.